Good morning and a very warm welcome to you. I'm Rachel for Kalkine TV, reporting live from Sydney. And you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US markets. Wall Street ended firmer yesterday in a partial rebound from the previous day's broad sell-off, with remarks from US Federal Reserve Chairman Jerome Powell and the ongoing debt ceiling debate keeping a lid on gains. The S&P 500 index and the Dow Jones Industrial Average advanced, but the Nasdaq closed lower. That's as Treasury yields halted their ascent. Defensive sectors took the lead as investors sought stability in the volatile market. Benchmark US indices did close mixed yesterday after consumer staples and utility stocks posted strong gains over fears of a slowdown in their economic recovery. The S&P 500 was up 0.16%, while the Dow Jones rose 0.26% and the Nasdaq fell 0.24%, with the small cap Russell 2000 down 0.2%. The stock indices witnessed steep losses on Tuesday as concerns over inflation and bond yield spike led to one of the worst sell-offs this year. High commodity prices, including oil, boosted gains in the bond yield. Overall, Wall Street saw choppy trading in September, and this was due to concerns over a sooner-than-expected tapering of the Fed's monetary support. Yesterday, Fed Chief Jerome Powell indicated that inflation is likely to remain higher this year. However, he also warned of economic uncertainty in the medium term. Market participants turned their focus on defensive sectors as fears of a slowdown in the economic recovery weighed on their minds. All 11 sectors of the S&P 500 index stayed in positive territory, with consumer staples and utility stocks scoring the biggest gains. Looking at the futures and commodities market, gold futures were down 0.65% and silver decreased by 4.24%, while copper fell 1.64%. Brent oil futures decreased by 0.52% and WTI crude was down 0.78%. Let's take a look at the bond market now. The 30-year Treasury bond yields were down 0.33%, while the 10-year bond yields fell 1.15%. US dollar futures index increased by 0.65%. Well, now it's time for a very short break, but stay tuned. I'll be back with the Asian and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
And welcome back. I'm Rachel and you're watching the Global Markets Roundup show. European stocks rose yesterday after one of the worst market routes this year as AstraZeneca lifted healthcare stocks on a deal to buy a rare disease drug maker, while chip equipment producer ASM gained on an upbeat earnings forecast. The Pan-European Stoxx 600 index rose 0.6%, with investors gradually looking past a 2.2% fall in the previous session. London markets traded in the green zone, with the FTSE 100 pushed up by financials. Japanese stocks ended over 2% lower yesterday, tracking overnight losses on Wall Street due to the heightened inflation woes, while investors awaited the ruling party's leadership election that would decide Japan's next prime minister. The Nikkei average fell 2.12% to its lowest since September the 3rd. The index lost most of the gains after outgoing Prime Minister Yoshihide Suga offered to step down on that day. The broader topics lost 2.09%. China stocks closed lower yesterday as a widening power crunch prompted investors to exit sectors vulnerable to factory shutdowns, including chemicals and steelmaking. The blue chip CSI 300 index fell 1%, while the Shanghai Composite Index lost 1.8%. South Korean shares ended weaker yesterday after hitting a 6-month intraday low on a broad sell-off in tech heavyweights amid concerns over the widening power crunch in China. The Kospi closed down 37.65 points or 1.22% after skidding as much as 2.17% to its lowest since March earlier in the session. On Wednesday, the ASX 200 fell 1.1%. Bendigo and Adelaide Bank, CSL, Fortescue, Newcrest Mining and Ramsay Healthcare are a few companies paying their latest dividends to shareholders today. The Australian-New Zealand dollars were under pressure again yesterday as a skid in global share markets and a sell-off in the US. Treasuries slugged risk sentiment and sent local bond yields to multi-month highs. The Aussie sagged back to 72 cents overnight. The repeated failure to clear resistance puts the focus on recent lows, and a break could unleash a sharp fall. Benchmark iron ore futures on the Dalian Commodity Exchange for January gained 2.1%. Well, that's all for now, but keep watching Kalkine TV for more market updates. I'm Rachel, signing off for now.